In this episode, we're talking about what the passive investing landscape looks like in 2024. Stay tuned.
Welcome to Fear-Free Passive Investing, where we help you conquer your financial fears and unlock the secrets of passive wealth creation in real estate. Get ready to break free from fear and embrace a life of financial freedom. Here's your host, Luke Miller.
What's going on, everyone? I hope you're doing well. It's a beautiful day on Friday, February 9th. Gosh, the year has been going on for a while. I've been planning this episode for a long time, and it's already almost mid-February from when I am actually getting to it. So, this topic's been on my mind for a while. What does passive investing look like going into 2024? Now that we're actually in 2024, the landscape has changed quite a bit, even over the last year. And so we're going to jump into that today. But first, before we do that, I just want to say thank you to everyone that reached out after last week's episode where we talked about kind of my shift from multifamily over to vacant land investing. So if you missed that episode, definitely go back and take a look at that. And if you have any questions about that, definitely feel free to reach out to me. I'm an open book and happy to share what I've learned and help you along in your journey as well. So with that, let's start talking about what the passive investing landscape looks like in 2024. All right, so what does the landscape look like in 2024? Well, there's definitely no secret that deals are struggling right now. I think across asset classes, you're looking at struggling deals, mostly because of debt, but also because of other concerns, mostly cash constraints. And the trend right now in passive investing, but also active investing, is really just cash preservation. I'm struggling today. I'm getting over a cold, which is why I might sound a little frazzled or disorganized. But right now, especially in the deals that I'm a part of, I'm asset managing, I'm actively managing. Cash preservation is king. I'm going to stop saying that because I'm struggling with that. So what we're trying to do is really just get into better debt, which means we need to push occupancy as much as we possibly can. Occupancy means performance is good. People are paying rent, and we want to make sure that the bills are being paid and the debt is being paid so that eventually we can get out of that debt and make some money. Now that's multifamily. I imagine that's the same for commercial office and other commercial assets as well. But let's talk about what we talked about last week a little bit and talk about why land is so powerful right now. A lot of these struggles that a lot of people are having right now are because of that leverage that we have. Leverage is a great thing, but sometimes leverage is a bad thing, especially when the leverage is the key to your downfall or your distress. And so a lot of these land deals that I'm doing now don't even have leverage on them. Or if they do, they are leverage that takes into account a very low cost basis, meaning my what I'm paying for the deal is so low relative to the actual value of the asset that it ends up being well over 50% loan to value. But, sometimes I'm only levered 30, 40% into a deal, which I can easily stomach and sleep at night just fine, as opposed to 80 or 75% loan to value in some of these commercial real estate assets. And so, the trend right now that I'm seeing is really just like keeping your nose to the grindstone and making sure that we can survive until 2025 is one thing that's been popular in the forums and investing circles, which, that depends on many things. But the idea behind that being that rates will come down and we will see relief in next year or even the year after that. So I think we are past the onslaught of if you have to sell, you are selling. And if you, meaning if you were so far underwater that to avoid a foreclosure, which some deals, multifamily deals, have been foreclosed on, many probably, I would imagine, a few notable ones as well. But if you can survive the foreclosure process by selling, you have sold. Now, you've obviously probably taken a loss on some of those. But if you don't have to sell and you don't want to sell because of the value, which is where I find myself in a lot of our deals, we tried selling several of them and the offers came back that were just way too low. So it wasn't prudent of us to take those. So we are surviving, That's the best way to put it. Yeah. And so the next point I wanted to make was, what are the options for passive investors? Now, obviously, if you've got your money invested in a deal, you don't have many options. Certainly communication with your sponsor is key, but making sure that you're doing your due diligence on any future deals is really what this episode is about. I think there's probably going to be a large subset of people that don't want to passively invest anymore because maybe they've had a bad experience, but there's probably lots of people that have had good experiences out of this. And really, this is the episode for you. What I am seeing, just from a very narrow subset of the people I follow and the groups I follow and talking to investors, that there is still a lot of appetite for growing your wealth through real estate. Now, what that means is you're looking for yield. You're looking for a return on your investment, obviously. It's not so much preservation of capital right now as it is you want to grow that wealth. There's lost ground there. And so I think a lot of people are turning to alternative asset classes. I see a lot of folks making the switch to car washes and pickleball courts is one thing that I saw a group doing. Really interesting things like that. But what does not change is the fundamentals of a good deal. And so no matter what asset class you're choosing, that's really what this comes down to is, can you find a really good deal? And can you safely enter and exit that deal with minimal leverage right now? There are definitely opportunities in the market right now. Like I said, there were people selling their multifamily buildings. They might still be. I don't see many assets for sale right now. Like I said, I think if you had to sell, you've already sold by now. There might be some people running out of cash and trickling out these sales. But I think there's opportunities that lie in decent offers on commercial real estate that allow investors to return a little bit of their investor capital and make a small profit. And so I really do think there's options, and there's no bloodbaths anymore that I'm seeing in the multifamily sector, certainly not in the land space. But what this has done is this has created almost a pseudo buyer's environment. Now, it's definitely a buyer's environment for, or a buyer's market for folks that are buying commercial real estate. But in the land space, this is a very different scenario. And what I mean by that is these interest rates rising have really done a lot to the buyer's market, because I'm able to go to a seller and say, hey, interest rates are so high. I can't pay what you want me to pay. I just can't pay that right now. I can't get leverage for that. So your price is a little unrealistic. And so what I can pay is a little bit less. And this is one of the reasons why I love land. This is an alternative asset class, right? We've already established that. But there's so much opportunity and so little competition in this niche right now that I'm really seeing strong returns. And so much so that you're able to accomplish a whole lot with very little money. And, our average purchase price is somewhere around, I would imagine, $50,000 to $60,000. And so from a passive investing standpoint, yeah, you're not going to have a huge amount of capital that you're able to place in deals with sponsors that are investing in land. However, your return and your velocity of capital is coming back so quickly that it's a very, very low risk investment. So, if you want to discuss that further, I'm going to do another episode based on, the fundamental of a land deal, because there's so much nuance into how you invest in land. There's a million different ways to be a land investor. I think most people assume that investing in vacant land is literally just land banking and speculating on future growth, which is definitely a strategy, but that's not my strategy. My strategy is more akin to like fix and flip, value add land investing. And right now, there's so much opportunity for that. It's crazy. Now, I'm just wrapping up a bigger deal. This one did take on a partner, but the partner's investment was $75,000. That's it. And they already have I'm wiring their money back right now. But this was a 5-month project where they wired money in. 5 months later, they got their full initial investment back. And for the next 7 years, they will receive free cash flow, essentially. And because of the investment in a land note, and again, we're going to talk about land notes and why they're so powerful, but the fundamentals of that deal, I mean, 5 months after your initial investment, you have 100% return of capital. And for the next 7 years, you will receive a monthly check coming in every single month without fail, because the leverage on this deal is zero. We own this deal outright, and we've sold. And just as a quick, overview of this deal, we bought 2 parcels and we subdivided them into 4 parcels. We sold 2 of these parcels for cash, so that recouped our initial investment and then some. And the other 2 were sold on seller financing. So for the next 7 years, this person's going to be paying off these notes. And so, those first 2 initial sales gave us all of the investors' investment capital back, all of my hard costs back, and enough for us to split some profit. But then we split this cash flow coming in. It's around $1,500 a month that we're going to split for the next 7 years. So that's a massive amount of value added in a very short amount of time. So that's the type of opportunity that I see in the value add land space that I'm looking to replicate multiple times over. So bringing it full circle back to what we were talking about, what does the land investing outlook look like for 2024? I think honestly, it's low leverage, alternative asset classes, and making sure that the operator is doing as much as they possibly can to preserve your cash. And so with all those things, that's really all I wanted to talk about today. Again, we're going to do more episodes on this. I know there was a few people that reached out last week about last week's episode and wanted to know a little bit more and for me to expand on something. And so I explained to them, but we're going to do some episodes because I'm sure other people are interested. So with that, I'd love to chat with you more. If you have any questions, please feel free to reach out. My name is Luke Miller. Thanks for listening to Fear Free Passive Investing.